Good morning, friends. Today it's 10th of Feb 2025, and the technical outlook for Nifty and Bank Nifty futures for intraday and short-term time frame is as follows. So we have seen that Nifty has bounced back sharply from the lows of 22,809 made on 27th of Jan to the highs of 23,853 as on 5th of Feb 2025. So within a month, we have seen that the index has bounced back almost 1000 points, and thereafter it entered into a slight consolidation phase. So last three sessions it has been within a range to slightly downside biased from 23,853 to the lows of 23,521 before ending the last week at 23,622, up 0.29%. As per the price study, we continue to hold the range to positive outlook over and above 23,223,000 levels, with a resistance at around 24,000 to 24,500 levels. So there are cluster of resistances on the higher end, but overall the setup and the structure which has been formed in last 2 weeks indicates downside is capped. Though as per the open interest data, there are heavy call writers active at the out of money strikes, which indicates the upside is also capped, and the index may end up within a range rather than giving any kind of major breakout or breakdown in days to come. Overall, as per the price study, trading over and above 23,000 mark, Nifty spot, the bias remains downside capped with a hurdle at around 24,500 on the higher end. For the day today, the trading range can be 23,480, 23,920 with buy on dip and sell on rise outlook. Dips towards 23,480 and 23,400 odd levels can be looked for buying, keeping a stop of 50 odd points, while pullback towards 23,920, 24,010 can be looked for contra trading shorts, keeping strict stop loss of 50 odd points. As per the weekly OI data, for 13th of Feb, maximum call build-up is at around 24,000 mark, and maximum put build-up is close to 22,500 strike price, which indicates a broad range. Though yet the bias remains slightly upside capped as per the quantum of the call writers active at the higher strike prices. If we talk about Bank Nifty is slightly outperforming Nifty 50 in last couple of weeks from the lows of 47,722. The index bounced back to the highs of 50,798, and last week it ended at 50,381, up 1.23%. So the bias still remains range to up buy on dip outlook over and above 49,000 mark, with a cluster resistances at around 51,500 to 52,000 zone, which need to be held in order to witness fresh round of short covering combined interest. For this week as a whole, holding over and above 49,000 mark, downside is capped and dips can be looked for hedged long strategies, expecting Bank Nifty to test the highs of 51,500, 52,000 levels. For the day today, 49,850 and 49,500 can be looked for buying, keeping a stop of 100 odd points, while pull back towards 51,000, 51,250 can be looked for selling, keeping a stop of not more than 100 odd points. As per the weekly OI data, monthly 27th of Feb, open interest has maximum call build up as at around 51,000 strike, and 47,000 put has the maximum put strike at the lower end. So the broad range is 47,000 to 51,000 mark. Though in between, as per the price study as mentioned, holding over and above 49,000 levels, the bias remains range to downside capped. So net both Nifty as well as Bank Nifty is stuck within a range, and hedged longs can be looked on dips in days to come. Thank you.